Yo, checking, mic check. Yo, checking, mic check. Yo, checking, mic check. Yo,
we know you guys can hear this loud and clear. Awesome. We know you guys can
Mike's cooperating. That's good.
Clear. Awesome. We know you guys can
Mike's cooperating. That's good.
Clear. Awesome.
Mike's cooperating. That's good.
Clear. Awesome.
Mike's cooperating. That's good.
Clear. Awesome.
Mike's cooperating. That's good.
Too loud. Too soft. Too loud. Soft.
All right, checking now. Does that work? Better? Okay. I know what was going on there. It was basically streaming both my desktop audio and my mic at the same time. So there's always something weird that happens, you know what I mean? This technology stuff. You always got to tell it what to do and pick the right settings, or else it's just all out of sorts. But Coachella's not for another couple months, man. Well, we can have our own version of Coachella right here at MadazMoney. You know, a fun fact: I used to produce trance music, so I can still probably have it left in me. You know, I can still do it. FL Studio. Who knows FL Studio or Reason or Cubase? We have any music producers in the house? Yeah, there you go. FL Studio. That was my thing. That's my thing. FL Studio. All the way back to FL Studio. Exactly. Fruity Loops. All the way back before it was even called FL Studio. Fruity Loops. Exactly. That was my thing. Making dope beats. Let's see who do we have in the house here. So we got Cruz, we got Gino, we got J Spec, we got Miko, Vuvu, Stalker 8, Trader Victory, new member this week. Welcome. The Gravity, also new member this week. Welcome as well. Rick K, Lucky Trade 76. Took CX. Not sure if I'm pronouncing that right. I apologize if I'm not. Larry Cal. All right, we got some troopers here. You guys are troopers. Spending your Sunday mornings at MadazMoney. Always willing to learn. That's awesome, guys. Phaser in the house. What's up? The hack is back. The hack is back in the house as well. Awesome. Good stuff. I know there's probably a handful of you guys just, hanging out in the back there. It's all good. It's all good. So this is our first ever members only MadazMoney webinar. First of many. I guarantee you that. There will be a lot more of these. I'm trying my best here to bring you guys as much value as possible, of course. And I feel like this webinar is a great way to do it. It's a lot of good information out there. And again, it kills two birds with one stone. You guys get this webinar and you guys can ask your questions. And then once it's done, it gets recorded, posted, and you guys can review it because this information is timeless. And you guys can definitely, review it at a later point in time and, review some of the information and use it in your trading day to day, hopefully. So this is the first webinar of many, members only, of course. And today we're going to talk about opening bell setups. And this is the reason why I'm doing this webinar specifically is because I get a lot of DMs from a lot of you guys asking the same questions over and over again. How do I know when it's a long? How do I know when it's a short? When is it a washout long? When is it a panic pop short? Pre-market highs, this, and that. And a lot of you guys aren't entirely on the same page. I know a lot of you guys out there are, really, really good already at this stuff. But I want to go ahead and take some time and go over every single one of these scenarios. Cover all the bases. That way everyone's on the same page, because that's how we do things here at MadazMoney. We want to make sure that everyone in this community is on the same page, because that way, come Monday morning at 9:30 Eastern Time, 9:30 a.m. Eastern Time, and I'm on mic and I'm telling you guys, hey, this is what I'm looking for. You guys actually know what's going on from top to bottom. You know exactly what I mean when I say, okay, this is a line in the sand. It's over the line in the sand. I'm going long on dips, or it's below the line in the sand. I'm going short on pops. So you guys know exactly what I mean by that, and you're just not kind of just twirling your thumbs in the back and just wondering what the hell is going on. Because I hate to see that. I want to see you guys do well, and I want to see that everyone is on the same page and we know exactly what's going on from the get-go. So that's the point of this webinar, catch everyone up to speed. And this webinar is also helpful for people that already know what they're doing as well, just in case there's some aspect that you don't have covered or you're just not sure about. So this webinar is really helpful for people that already know what they're doing, as well as getting all of the members that aren't up to speed all caught up. So let's go ahead and dive right in and talk about opening bell setups. And one second here. So with regards to opening bell setups, I'm going to focus only on the first 5 to 15 minutes of the day, and that's it. Okay, I'm not even going to talk about the stuff that happens after the fact. This is just the first trade of the day. This is basically my washout long at the open, my first panic pop short at the open, where you see me make the quick 500, 1,000, 2,000 bucks, no matter whatever the case may be. This is just that first trade. Okay, I'm not even talking about that secondary pop or the secondary dip or anything that happens after the lull, grind time, afternoon, or anything like that. This is just focusing on that first, basically that first couple candle, or the first candle even, where you see that first huge surge up and then you short it, or the stock dips, washes out, and we go long. That's it. Okay, I feel like that's where a lot of opportunity exists, and I feel like that's where we can really capitalize. There's a lot of volume. Most of the volume happens in the first candle most of the time, as we all know, and I feel like that's a golden opportunity for us to just go in, take our quick couple bucks, grab some Big Macs, and then be on a nice cushion for the rest of the day. And I feel like that's a great way to start the day. It creates a great mindset. You're already up, you're already up, and then you're not crawling out of that hole if you end up making a bad decision. It's a really shitty situation if you take a loss, and the next thing you know, you're just kind of revenge trading, and everything just falls apart. We all know that, right? We all know that trap when you get stuck in that first bad trade and you take a loss and you go red right away. So this is to prevent that from happening. So that way we start the day off green. We take advantage of the most volatile and the most high volume part of the day, capture some profits, give ourselves a nice cushion for the rest of the day. So we're going to talk about whether or not it's going to be a washout long or a panic pop short. Again, a lot of you guys, I see it in the DMs, a lot of you guys are still confused. When is it a washout long? When is it a panic pop short? And to be completely honest with you guys, just to touch up on the subject a little bit, there is a little bit of a gray area. There's some washout longs that aren't created equal as others. Same with panic pop shorts. There's some washout longs where it may be an A setup, and there's some washout longs that might be a C setup or less than that. Same thing with a panic pop short. There might be some panic pop shorts that are A setups, golden setups, and there are some that aren't as good. So we have to treat it as such. We have to respect that, and we have to basically size appropriately, which is one of the next bullet points. We're going to go over the difference between a day 1 versus a day 2. Okay, there is a difference. And beyond, of course, as well. A lot of you guys aren't entirely sure what's the difference between a day 1 and a day 2, and we're going to go over exactly that. And when dealing with these opening bell setups, of course, we have to respect pre-market, daily support, and resistance, because a lot of these times when it's a new fresh ticker, that's all we have to go off of. That's the only information we have to go off of. So we have to use that to extract some of these support and resistance levels to base our risk off of. Okay, and this is what you see me do every single morning during pre-market. And when I talk about my gap scans and I'm looking at supports and resistances, where am I pulling these numbers from? I'm not pulling it out of my ass. I'm pulling it off of the pre-market chart, and I'm pulling it off of daily support and resistance. Prior day support and resistance, if it's a day 2 and beyond, of course we talk about this as well. If a stock has managed to somehow survive day 1 and last in a day 2, even if it's a short setup, we still have to respect the prior day support and resistance levels, because there was probably a lot of volume traded during the prior day, obviously, and we have to respect that. Okay, and then going into the next point, identifying high versus low percentage setups using risk-reward ratio and sizing appropriately to each setup. Okay, that doesn't mean we go all in short on like the first pop to the first resistance when you have like 4 possible resistances where the stock is going to go to, right? That's we're going to talk about exactly what can happen and what can go wrong if you decide to do that. And I've fallen into that trap before, and I'm talking about this so that way you guys won't fall into the same trap, hopefully. Okay? For the sake of this webinar, we're only going to talk about pre-market gap scanner plays. That means the stocks that are only gapping up or down, but mostly up, off of the gap scanner. And you guys that use trade ideas out there, or you guys use the dash trade or topless, you guys know those are basically the top gappers of the day. And we're going to basically just talk about those stocks only. We're only going to talk about the stocks that get the huge candle out of the gate on that first candle, the bum rush type plays, the ones where everyone knows it's going to be in play and they just hit the buy button, they chase it, or they hit the short button, they slam lows. The bum rush type FOMO type plays where everyone has eyes on them. Okay, we're only going to talk about those type plays. Because these are the type of plays that are going to be the most volatile. They're going to give us the most panic, and they're going to have the most volume. And we're going to exclude, for the sake of this conversation, we're going to exclude chat pumps, because chat pumps are their own beast, and there's a lot more can happen with chat pumps. And we're for the sake of this conversation, we're not going to talk about chat pumps. So we're going to talk about that at a later time. It's going to be a good webinar topic to talk to in the future. So what do we do? The first step, analyzing pre-market chart. Okay, so because again, a lot of times that's all we have to go off of, so we have to make do with what we have. So there's 3 scenarios. Okay, there's 3 scenarios. Okay, you got your nice uptrending pre-market chart. You got your ugly downtrending chart, and then you got your sideways kind of neutral chart, right? So you guys see this all the time. You wake up in the morning, you look at your gap scans, you do your analysis. A lot of you guys out there actually do trade pre-market. You guys get up a lot earlier than me. You guys that live out there in the East Coast get up a lot earlier than me, and you guys see the pre-market chart form. These are the 3 scenarios that you typically see. You got the uptrending one, you got the ugly one that's faded all morning, and then you got the one that kind of just dances around in the range, right? You guys see this all the time. So what do we do in these 3 scenarios? I'm going to talk about this in this presentation, so you guys know, okay, if it's a nice uptrending chart, what I do, how do I plan for a long versus a short, ugly downtrending chart, same thing. So that way, when you guys see, okay, this is what's being shown, okay, this is what I need to do to react to that, okay? If you guys know about me, how I approach things, I'm all about doing this whole if-then kind of statement kind of thing, right? Like a computer program. A computer program is basically a bunch of if-then statements, if, then, else. And that's how I approach trading. If nice uptrending chart, then this, right? If ugly downtrending chart, then this, else this, you know? That's how I approach trading. This is how my mindset is, and this is how I'm able to process all this information so quickly. So in all three scenarios, what do we need to do? We need to identify the following. We need to identify pre-market highs, pre-market lows, and all the supports and resistances in between. So this is why you guys see me at my charts on on my Thinkorswim and my videos where I draw all these lines. This is where I get them from. Okay, so these are just the levels that I'm pulling off of the pre-market activity. No, it's not rocket science or anything like that. It's nothing crazy. I'm just pulling in. I'm just seeing where the stock is going to go to and where it's going to, how it's going to behave on the chart. Okay. Again, for the purpose of this presentation, we're only going to talk about the chart. We're going to talk about level 2 and tape reading another day in a future webinar. But for the purpose of this presentation, we're solely going to focus on the chart, keeping it simple, just not to confuse you guys by throwing too much at you at once. But we're going to talk about just using that pre-market chart and also the daily and prior days supports and resistances, if they are relevant, to help us use as a guide to see how we can approach this opening bell trading. So let's go ahead and talk about the first scenario. We're going to talk about the nice uptrending pre-market chart. Okay, so I'm going to go ahead and pull up this cool pen tool. Give me a second here. All right. Let's see where it went. There we go. It's a pretty cool tool, by the way, if you guys want to know. Epic Pen. You can draw on your screen kind of like as if it was a touch screen. All right, so let's draw this. Take this pen here. All right, let me know if you guys can see this. So a nice uptrending pre-market chart. So let's just pretend this is pre-market. So this is basically a chart that kind of looks like this. You know, typical pre-market uptrending chart. You know, you got your pre-market highs up here, your pre-market lows down here, and you got your support and resistances, right? And such. So what happens here is obviously in this situation, this pre-market highs is going to be critical, right? It depends on how the stock opens. If the stock opens like this, then we're going to buy dips against pre-market highs and then keep going long, right? But sometimes you get a stock that kind of just opens, like makes a weak pop, and then it just goes down, right? So there's two scenarios, right? You got scenario 1 right here, and you got scenario 2 right here. Right, so this is the typical nice uptrending pre-market chart setup. It's a great long if pre-market highs can hold, right here. But if it doesn't, you can't make that assumption either, right? So a lot of mistakes that a lot of people make is, oh, this is a nice uptrending chart. It's going to keep going up, right? Well, if it doesn't go up, then, you know, if it rejects pre-market highs, if it's not aware of the pre-market highs concept that we talk about every single day here at MadazMoney.com, well, they're going to get destroyed. We've seen this one too many times, right? But at the same time, some people out there also might be like, oh, this stock's up too much. It's a short. It's overextended, right, as they say. And to me, overextended is so subjective, guys. How do you define what overextended really is? Is 50% overextended? Is 100% overextended? Is 200% overextended? I mean, we've seen stocks go up, you know, 600, 700, 1,000%, and it's still going up. I mean, to me, overextended is not a good enough reason to ever determine whether or not you should be in a trade or not. It's not valid to me. Okay, but, you know, to each his own. That's just my opinion. But a lot of the people there that are saying, like, okay, it's up, you know, the stock, let's say the stock's up like 200% pre-market or something like that. It's a short. I'm going to slam short at the open or whatever. You know, if they don't understand this pre-market high concept, stock rips at the open, it dips down and it goes up, you know, you're torched, right? So let's go over some examples of these. We're going to talk about some recent examples. TBLT, of course, a recent one. OCX, Codex. So we're going to pick up some recent examples that you guys are familiar with and talk about these concepts. Okay. So let's pull up the chart here real quick. Any questions so far? Are we on the same page? Are we good? It's kind of eerily quiet in here. J-Spec's good. Stalker 8. If I'm losing you guys at any point, if I'm starting to speak, if it sounds like I'm speaking in like, you know, ancient Greek or something, let me know. Okay, cool. That's good. Cruise is focused. Sunday morning. Sunday afternoon for some of you guys already, but that's good. You guys are all awesome. Okay, so let's look at TBLT on 116. Let's get rid of some of these lines here. All right. So erase this. Okay. All right, so TBLT on 116. Nice uptrending pre-market chart, right? Exactly what I was talking about. Let's just say we don't have the knowledge of knowing what happened, okay? Let's just assume that we don't know what happened. Okay, so we got this nice uptrending pre-market chart, right? There we go. We got this, right? Yeah. We got our support and resistances, right? So what do we do in this situation? Like I said, if the stock holds pre-market highs, this is pre-market highs, it's a long, right? So the stock rips pre-market highs, it's a long, right? So let's see what happens. Stock rips, it's a long. And look where it bounces off of right here. How convenient is that, right? This is pre-market highs. Okay? So in this situation, it's basically a long on dips, although it didn't perfectly wash out to pre-market highs. What I'm looking for is basically for the stock that's ripping like this to dip back to pre-market highs and then continue higher. Obviously, it didn't perfectly do that. You're going to have to kind of tape read this stall right here and to capture this move. Still 50 cents there, by the way. But in a perfect world, a stock that rips like this would dip back to pre-market highs, retest it right here, and then rip higher, right? Okay, yeah, I can actually move the cam. 1 second. Or I could just make it smaller. There we go. Sorry for all you guys that wanted to see my pretty face. I have to make myself smaller here. There we go. Alright, is that good? We good? Okay, cool. So we're on the same page here. We can see that this is an uptrending pre-market chart. What I'm looking for is a retest of pre-market highs for a continuation higher, or basically any dip above pre-market highs. Any dip above pre-market highs is going to be a long. Are we on the same page there? Are we looking good? So you guys understand what I'm talking about here. As long as this thing is over pre-market highs in this scenario, we're going long. Stalker 8, good. Okay, so it looks like we guys are following along, which is good. Okay, so conversely, we have to understand that, you know, it's not going to always look like this, right? So what's the opposite scenario? Right? Again, this is a case where it was a long, but we have to understand that it's not always going to be the case. You can't just make that assumption and be like, yeah, it's going up pre-market. I'm assuming it's long. I'm going to chase it, right? You can't do that either. Okay, so let's just say you didn't know this candle. You can't just jump in and be like, I've seen this before. A TBLT on this particular day took off. It's going to be a long. Whatever. You can't make that assumption either, right? Because the other example would be the stock ends up just making a little bit of a perk here and then just kind of stalling out and just dumping, right? We've seen that way too many times as well. So we basically have to allow the stock to show whether or not it's going to rip cleanly off of pre-market highs or it's going to reject and then go down, right? You have to let the stock show its hand. You can't just take the gamble. And I think a lot of newbie traders out there, they make this assumption all the time. At least the ones that I see that are in some of these chat rooms that are just blindly following alerts, they make this mistake all the time, right? And I saw some of you guys talk about how you guys, before joining MadazMoney, you guys would chase these breakouts too, right? And this is what we're here to teach you guys. Again, this is just my humble opinion, which I hopefully can, help you guys with. But, I've seen you guys all the time talk about, how you guys used to chase breakouts and all that. And I still see a lot of people do it overall. And they see this kind of chart and they see the chat room alert, whatever, and then they start chasing it. And sometimes you get the instant pop and drop kind of move. Okay, so again, we have to always respect what the stock is doing. We can't take a guess and gamble on what's going to happen. We have to understand. We have to let the stock show its hand first and then react to it. So in this particular case, we got a nice uptrend. And then we just buy dips off of the support level for a move higher. And we keep buying dips until pre-market highs is holding. Right? And then once pre-market highs, you see how pre-market highs is holding up there. It's no coincidence, guys. And then once pre-market highs is lost, right there. Right there. See you next time. So this is a pretty good example of pre-market highs coming into play, even beyond the first 15 minutes, by the way. I'm just talking about the first trade right here. But you can see pre-market highs right there, pre-market highs right there. You got some shorts that probably slammed there thinking it was the end right there. But then, you got the chop, sideways chop. This is when I'm trader napping. Anyone that wants to gamble here, be my guest. I'm not doing that. God, I'm starting to look like John Madden here drawing over this chart. Who gets that reference? Any football fans out there? You got the pre-market highs right here, and then you got the dancing here and all around, and then you got the. Oh, you guys got what I'm saying. Some good Sunday fun, guys. All right, so let's just go ahead and talk about the next chart. OCX on 129. Okay. So this one's good. This one's a good example too, because this is tricky. Let's go ahead and do the same thing. Okay, we got the uptrending pre-market chart. Right, the same thing, right? Same thing. Supports and resistances. Let's clear these lines. All right, let's clear these lines. Okay. So we got our uptrending pre-market chart. You got support and resistances, right? Same thing, right? Same thing. So in this situation, what do we do? Same thing. I mean, it's not, again, I always talk about keeping it simple, right? As long as pre-market highs, over, under, what happens, right? Pre-market highs. So you see at the open, it's starting to look like the short, right? It's starting to look like the whole, fizzling out, dumping, right? But here's the thing. This is why I scalp, guys. This is why I scalp. Okay, because a lot of people that are like slamming short here, they're like, oh yeah, it's rejecting whatever, and then it's going to go down, right? It's going to go down to here, here or whatever, right? But you can't really make that assumption either. This is why this is from 420 to 360, mind you. This is 60 cents already, so this is a pretty good profit if you're shorting. But I would just short here off of pre-market highs and take the washes, and then reevaluate on the next trade, see what happens. Because look what happens here. Pre-market highs rips. All the people that shorted here, see you next time. Thanks for playing. Right? So we got to understand, okay, pre-market highs was respected from a short bias standpoint here for the first couple candles. But you got to understand that, hey, support and resistance still comes into play. You can't just like that one assumption and then forget about support and resistance here, right? This is pre-market support right there, and this is why I talked about in the beginning of this presentation. We have to respect and note pre-market support and resistance, right? Pre-market support holds, pre-market highs rips. Guess what? Now this thing that was a short, technically, for the first 10 minutes, 12 minutes, right? This is a 3-minute chart, so 12 minutes. Now guess what? It's a long now, right? And this is what I talk about this is what I mean when I talk about my bias switches. How do I know when to bias switch? This is a great example of that, okay? Short, take my quick, 40, 50, 60 cents or whatever. I already got that in the bag. And then boom, bias switch, change direction, pre-market highs. All the people that chased here, slam lows, they're torched. Okay? Great example of that. Let's see what happens here further. Again, this is a very recent stock, guys. This is OCX. Just a couple weeks ago. So, look at that. Great long on dips. You got support there. So a stock that was a short at the open now is a great long on dips. And we're not even at 945 yet. Right? All because of what? Pre-market highs. Look at all that volume pour in too. Right there on this particular candle. This is all the shorts here that got screwed, and they're just like, I'm screwed. Stopping out. Right there. This is a squeeze from hell. Basically, right there. Squeeze from hell. So, this is a good example of that, guys. Good example of that. So, who's on the same page here on this OCX example? Basically, a short setup that turns into a long. Yeah, I think I got stuck in this one too, to be honest. I actually shorted this pop right here and got stuck in this, so. But even if you're stuck, right? Even if you're stuck in this candle short, all you have to do is just stop out and then go long on dips, and you'll be able to chip away at your losses. Right? Look, you got a dip here, a couple more dips. Right? All you have to do is stop out of this short. I mean, even if you're in like some size here for whatever reason, even if you're in size here, you're in 10,000 freaking shares, and you lose like 5-6 grand or something like that right here, you can still chip away at that 5-6 grand loss. Making like $1,000 at a time on these dips going long. The problem here comes from if you're stubborn and you stay short as this thing's a clear long. That's the problem. I think that's the problem for a lot of people, is that they are not willing to accept this loss right here, and then they keep insisting on beating the stock on the wrong side of the trade, in this case the short side, right? I think we're all guilty of that. Okay? I've been guilty of that too. Show of hands, we've all been guilty of that, right? Trying to attack the same stock on the wrong side of the trade is like a sure way to balloon your losses and kill your longevity in this game, for sure. Even if you lose a big chunk right here, if you don't switch to a long in this situation, your 5-6K loss is gonna turn to 10K, 15K, 20K easily if you're just gonna insist on shorting front side right here. And again, guys, how do we determine what's front side and what's back side? To me, it's as simple as this: pre-market highs, and that's it. least in this particular setup. Okay? So if you're going to insist on attacking the same wrong side of the stock, I mean, granted, there's some people that can do it. I mean, if you're able to top tick this every time, you know, more power to you. But I mean, how are you supposed to know that this thing isn't going to go higher, you know, and then you're just going to keep ballooning your losses if you're mistiming it, you know what I mean? I prefer to swim against the current. The path of least resistance to me is clearly the long the dips because this thing's in an uptrend. Shorts are screwed from this candle. Why swim against the current? At least that's my opinion. There are some people that are really good at shorting these. But for me, I'd rather just be long. And we all know that if you're long in these, more often than not, you get the quick 30, 40, 50 cents off of these bounces on these washouts. And more often than not, that 5K loss that you took right here is going to turn into like maybe only like a 2K loss or something like that. So that's just something to note and something to understand. Okay, guys, bias switch and the importance of being on the right side of the trade and not swimming against the current. OCX really is short at the opening so close to pre-market highs. I mean, this is not really that good of a short. I thought this was a good short because right here you got the panic. Right, this is where the real volume really came in. Right, this was the largest volume, so I thought this was a good short. Every time you get this wick kind of move, this is like a bunch of longs trying to chase it, thinking that they're gonna get the breakout, and then they get stuffed. Right, this is probably the best short right here, and then covering into this wash. But the problem with that is if you were shorting on this, you're probably looking for seconds right here, right? You know, you're probably like, you know, Oliver Twist, please give me some more right here, right? And you get torched in this candle. So, yeah, I mean it's tough. But the best short was probably right here. Right here was probably indecision. I'm not so sure. I have to go back and look at my trades to see if I actually took the short right here on this first candle, because this actually doesn't look that good to me. But this candle does, because this is like the panic pop, you know, the surge, and then you get the wick back, and then you get the nice wash. All right, so let's move on to the next example. If you guys were all clear on OCX on January 29th, I'm going to go ahead and move on to the next chart. We don't want to extend this way too long. All right, so OCX, I mean, this is Codex. Codex on 130. This is a good example of some nice washout opportunities. Same thing. You got the uptrending pre-market chart. All right, same thing, right? You guys seeing the pattern, right? Same thing. Same thing, right? So what happens? Same thing. We're going to look to see if the stock respects pre-market highs from a short bias standpoint or a long bias standpoint. Same thing. Okay, so let's go ahead and let's look at it. Okay, so what's going to happen? Pre-market highs, same thing. Support and resistance below that. So what's this thing going to do? Is it going to rip or is it going to fade? Right? So this is kind of indecision right here. You could take this long against this support level. It's below pre-market high, so we got to understand that a long below pre-market highs is by definition a slightly lower percentage setup. So we can take this long on a small size washout long opportunity. Okay, this stock actually is tricky right here because it looks like a short on this particular candle, but guess what? It rips right back up, becomes a long right here. Okay, now it's back to indecision. You have to slam back down, but it's still respecting this support level. So again, you gotta understand. Okay, pre-market highs is one level to respect. We gotta respect the other support and resistance levels as well. So it's kind of choppy here. So this isn't exactly the best clean setup for the stock to kind of continue higher kind of thing. But you got to understand how it's following the pre-market support and resistance is also following pre-market highs as well right here in this situation. Again, this is why I scalp though. You see the stall right here? You want to avoid this infinite dump kind of candle. take the quick profits. You see the stall here. High of day was put in on this candle at 3.8. This candle couldn't push and retest 3.8. You gotta kind of be on the back foot, make sure that you don't get stuck in this kind of dump candle, because this is pretty nasty. But you can see the same thing, right? Uptrending pre-market chart. Pre-market support and resistances are being respected. And then also the new high of day is a new level of resistance. That needs to be respected as well. So if you're a long, you want to see this thing continually making more and more highs, which Codex was not doing. So that's one clear sign that this is not something that I want to keep longing. I'll maybe just take a couple longs and then just sit on my hands. How do I know when to sit on my hands? If this stock is not really giving us that clean, clear direction of a move. Sometimes it just chops around, goes sideways. In the case of Codex, it's just going nowhere, right? Clean pre-market chart and then nothing here, right? It is bouncing off of this support level, putting in a resistance at 3.8. You got three pre-market highs here at 3.4, which is kind of funny because that's in the exact midpoint of this range, 3.4, 3.8. But you can clearly see that when there's no direction, we need what? We need price action, we need volume, and we need a clear direction. If we don't have a clear direction, we don't really have a trade. So in this particular case, we don't have clear direction. So at this point, it's not making new highs. I'm just going to sit on my hands and then see what it does. So let's see what happens. Okay, so we can see that because this stock has tested this level so often, it becomes a line in the sand. You also got pre-market highs, of course, as well, right there coming into play a couple times as well. So this is a line in the sand concept, guys. Line in the sand comes in when the stock tests that same level through consolidation multiple times. And then once the line in the sand is cracked, guess what? The volume pours in again. All the longs that were hoping for a move higher, they stop out right here on this candle, and the stock goes down. As simple as that, guys. Pre-market highs, line of sand, and guess what? The line of sand comes from this pre-market support and resistance. High of day, of course, resistance as well, 377 right there. Stock at no point in time ever even gets close to testing that high of day. That's a sign of weakness. Even though this is technically still front sign, that is a sign of weakness. So if I was a long, I would understand that this high of day is not being tested ever again after this move. It's a sign of weakness. So I would probably stop longing here, especially with the volume diminishing. Look at that volume drop off right there. And then kind of this chop action, line of sand crack, stock goes down. No longer a long. So that's a good example of a stock where it's an uptrending pre-market chart. You got some indecision here. There's a couple of washout long opportunities. Pre-market highs coming into play. Line in the sand as well. And then turning into a short once the line in the sand is lost. So yeah, it might be a little bit complicated to do something like that. I mean, I think a lot of people might get confused in the code talk, but overall, the key levels to keep an eye on are always the same, right? There's always pre-market highs, high of day, and then a possible line in the sand. So those are usually three levels that I keep an eye on. Okay, so if a stock makes new high of day, you want that to break and make more new high of days. You want to see pre-market highs defend for a long. And if there's any support or resistances below that, you want to see that respected as well and hold as that line in the sand for future longs as well. So those are the main levels that I'm watching from every single setup every single morning. So there really is a situation where there's that many support and resistances involved, especially for a play at the open. It's usually just maybe like 2 or 3, with pre-market highs being probably the most important one. So I'll probably say something like that. You guys hear me on mic every single day. I actually say pre-market highs or line in the sand or high of day. So I feel like that should be enough. If we start speaking in like code talk, I think a lot of people, especially some of the new members, would really have no idea what's going on. But let me know what works for you guys. I'm more than happy to, adjust and make this a more pleasant and good experience for you guys. All right, so that's my last example for a nice uptrending pre-market chart and how to react to each situation. So any questions on this particular scenario before I move on to the next scenario? Okay, cool. Glad you guys are learning. I'm glad that my explanation is pretty simple and clear. Trying to make it as simple as possible, guys. This is opening bell trading for dummies. I'm trying to make it as easy as possible, so that way anyone, even the newer members, can understand exactly what's going on. And don't be shy, guys. If you guys don't understand, just feel free to speak up and ask some questions, guys. I'm more than happy to answer any questions you guys may have. How does it relate to multi-day highs or 2-day highs? We're going to go into that later in this presentation. I will cover that. Don't worry about it. That is a special case. We're going to talk about that and another special case as well. Okay. So the next case is we have the ugly downtrending chart. So this is a great short as long as we're sitting below pre-market highs, but we cannot overcommit size at some of the lower resistance levels. What do I mean by that? Okay, this means that it can go further than you think. I think we've seen this time and time again. This is the kind of setup where pre-market, you got this, stock that puts in a high very, very early in the pre-market session, and it just continually downtrends. And a mistake that a lot of people make is that the first panic pop that pops to maybe this level, they start shorting in major size, or maybe even this level. They start shorting in major size. What happens then? Well, sometimes you short here and then the stock kind of stalled and then it goes higher. Right? Well, if you're short here, all in, full size, and this happens to you, well, whoops. Who's seen that happen to them time and time again, right? It's happened to me. I'll be honest. It's happened to me. You get FOMO. I missed this entire move, I'm going to short the first pop I get. You short this pop right here, or this pop, and the stock ends up ripping higher. Well, see you next time. Thanks for playing, right? Let's be honest. Who's had this happen to them? Who's gotten FOMO here at these levels and gotten squeezed here, and then you stop out somewhere here, and guess what? This ends up being the real top, and then it ends up fading after you get out. Who's had that happen to them? Let's be honest. Don't be shy here. It's happened to me. It's happened to me. It's happened to me. Yep. Maya says it's happened to him. I know he's not the only one, guys. Stalker 8. Yep, SNNA. That one got me too. And that one was sketchy on the tape as well. I haven't even started talking about the tape. Cruise. You are lying if you never experienced. I believe it. Exactly. I believe it. I believe it. So that's what we're here for, guys. This is what we do at MadazMoney. We're here to show you guys how to not get stuck in these kind of situations. That's all it really is, guys. It's how to not get stuck and how to not trap yourselves. So let's go ahead and look at some charts and some good, solid, real-life examples of this and how we can avoid this. I'm going to talk about some examples where it did work out for the shorts and where it didn't. So let's talk about TTNP. On it's the first, okay. So this did exactly what I was talking about, right? Put in a high relatively early in the morning, the pre-market session, right? 7 o'clock Eastern time. That's 4 a.m. my time. So I was sound asleep when this was going on. I wake up and I see this, right? You see this fade right here. And I'm like, you know what? I missed this move from 250 down to 2. I'm going to short the first pop, right? So right here, you get the first pop and it ends up fading. So this is a situation where it actually did work out. Alita Corp, this is going to be posted in the chat room in the trading content videos section, just like all the other content. Again, guys, all of our content is posted in the trading content video section. I'm just going to go ahead and type that so everyone knows. All our content. Okay. So this is a situation where it actually works, okay? And this is actually very interesting because when this starts working for a lot of people and they start thinking they can get away with this, shorting at that first low resistance, this is what happens. I call this, I actually talk about this, you know, with a lot of other traders, and I call this long-term FOMO, because this is what it's doing, is that it's reinforcing bad habits, right? If you can get away with this every so often, right? Like, for example, if you're on a diet and if you got like a fast metabolism and you're able to get away with cheating your diet, you only cheat your diet so often before your metabolism goes to shit when Father Time catches up to you, and then there you go, right? The same thing here. You know, you could only cheat the system so often and get away with bad habits before it eventually gets you. But this is a situation where it actually does work out, right? Shorting that first pop, and it actually does work. But there's going to be some instances where this does not work, guys. And I'm going to show you guys some charts where it doesn't. But this is an example where the short did play out nicely. The ugly pre-market chart, and then shorting that first pop, and then a downtrend. This is TTNP on February the 1st. Welcome, K Trader. We got a live webinar going on right now. Thanks, ViewView, for posting the link. Good to see. We got a lot of new members this week. That's awesome. MadazMoney community always growing strong, guys. OCX on 130. Let's look at that. So this is the day 2 of OCX. Downtrending pre-market chart. Panic pop here at the open to the first resistance. Ends up tanking. Another example here where it actually worked out. You wait for the first panic pop. Draw your resistance levels. And then it ends up going down. So this is a situation where it works. Again, though, good trade, but if you're over committing size in this level, you're reinforcing bad habits. And we're gonna get to that chart soon. You'll see what happens. Okay, because you never know. Because you short this pop, it can always go to here, pre-market highs. You stop out at the highs for a bad loss, and then it ends up rejecting afterward, right? SCYX, another example. On January 31st. Another example of an ugly pre-market chart. There you go. Barely bouncing at the open and then just going down, right? Again, anyone that shorts this, you're risking a bounce back to here. So this is another example where it did work out. AMRS on February the 6th. There we go. So this is it. Here we go. This is what I'm talking about. You see what I'm saying? You're starting to see it, right? You got your pre-market highs here. Support and resistance levels, right? Downtrending, ugly downtrending chart. The high of day was put in at 7 a.m. Basically at the beginning of pre-market. And guess what? You get to short the pop play at the open. You're looking good here. Now this is already after 9:45, but let's just assume this is still at the open. I've seen this happen at the open as well. You're shorting these pops, and guess what? Look at where this is going. I mean, what if you're shorting here, thinking that it's going to go down, and then it ends up going higher, and what are you going to do? What's going to happen, right? Average up. Okay, it's going down. It's going my way. Nope. Back up again. Well, add another. It's going to go down now, right? Lots of bag holders below pre-market highs. It's a downtrending chart. Come on. Not so downtrending now. You got an uptrend right here. It's going up even more. Okay, I'll average down more. Average up more. It's going to go down, right? We've seen this time and time again. The same trap. Right? Not always the case, guys. Once in a while, you're going to get this situation where the stock's going to go further than you think. And I've seen it time and time again, where you're forced into a situation where you're just averaging up and praying that the stock does not go up higher, right? Because technically, this thing could go even higher. The pre-market high is right here. It can still go all the way up to 610, 612, and still technically be a short because it's below pre-market highs. So this is where the risk-reward ratio comes in. If you're going for a short here, how much meat do you have left on the bone, realistically, if you're shorting at these levels, risking a rip potentially to pre-market highs? This is what I'm talking about, guys. So this is how you protect yourself. And this is why you see me say that I'm downsizing on these secondary trades. Okay? And sometimes we see this happen at the open too. This is a case where it happens after the open, but we've seen it happen too at the open, where you get the first panic pop, it kind of just stalled, and it panic pops again. You don't want to be stuck in that situation where you're just, stuck with a bad entry, you're averaging up, and then you're getting torched. You stop out at the top. Once you're out, it goes down. Seeing that happen time and time again. And this is why you guys see me downsize. So how do I handle this situation? What is my response to this situation? What I do is I size down. That's it. If the stock only bounces to only these resistance levels, I'm sizing in very tiny, right? Now, we all have our own risk tolerances, and we all have our own different ways of dealing with, calculating risk-reward ratio and all that stuff. And I'm not going to go into that because everyone has their own way of doing it. But the way I do it, and I can only speak for myself, is that I size in a lot smaller to account for the fact that this thing could potentially go all the way back from 5.2 to 6.12. Okay, and how do I do that? I go in small. So that way, if I do get stuck in something like this, it's not the end of the world. But if you're FOMOing here and you're like, I missed this entire move, say I even missed this trade, I'm going to go all in right here. It's going to keep going down because the stock's in a downtrend, right? Well, guess what? Look what happens, right? 5.2 all the way up to 5.7. And you're all in right here. You got no more bullets to add. Well, there you go. You're going to be in a world of hurt. So you guys understand what I'm trying to say, right? We're all on the same page here on not, using all your bullets on that first resistance level and leaving the possibility that it might do something stupid. Are we good on that? And this is very important, guys. Very important. Okay? Because by going in small here, you're giving yourself an opportunity to still capture some piece of the pie right here in case it does go down, but you're not overcommitted in case it does grind, you get stuck. So it's just all about risk management and risk reward. That's all it really is, guys. So this is an important thing to note, just controlling your FOMO and just not overcommitting size at some really, really low resistance levels where there just simply isn't enough risk reward, not enough meat on the bone to really justify that kind of sizing. Yeah, one more example of this, SXTC on 131, January 31st of this year. Let's see. So this one is actually over 2 days. Not exactly a pre-market chart, but I do want to give this example anyways. So there's not much pre-market activity, but it's sort of downtrending here. And this is like a day 2 as well. This is a good example. Though. I want to talk about this, okay? So you got the day 1 action right here. Stocks ripping. And then you get this infinite dump kind of thing, right? The infinite dump in the afternoon. So what happens when people see an infinite dump? Oh, this stock's done. I'm going to hold overnight. Blah, 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 right? So you got a bunch of overnight shorts. Overnight swing shorts, right? right? Infinite dump, stocks done, companies trash, the usual. China, it's China, whatever, right? Whatever rationale they want to use to justify holding major size overnight or whatever, okay? Swing shorting this overnight. So you got this downtrending chart, downtrending pre-market, okay? So what happens in this situation? Day 2, the stock's kind of gapping down, right? Short all pops. Lots of bag holders. Right? Lots of bag holders. That's short every single pop. Well, here's the first resistance. Short here. Let's short here, guys. Let's short here. Okay. All in. It's going to go back down. Lots of bag holders. Nope. Yeah, where's the next resistance? Right here? All right, let's short here. It's going to go back down. Lots of bag holders. Nope. You guys see what I'm saying? You guys see the pattern here. Even from a multi-day standpoint, doesn't always work. It doesn't always work. So how do you approach this situation? The same thing that I talked about on AMRS, the previous example. What you do is you start in small here. Okay, resistance 1. Okay, fine. Start in small here. A couple hundred shares, whatever, okay? Whatever your sizing parameter is. Oh, I'm getting ripped. You got 2 options. You could, number 1, you can stop out. Or number 2, because your size is so small, this loss isn't a big deal to you. You're still short biased because, the stock's below the prior day's highs. You scale in here, another couple hundred shares. You scale in here. Now your average is somewhere around here. And then when the stock, eventually goes back down, it's not the end of the world. You're only down a couple bucks. But the problem here is when somebody goes all in right here. That's the problem. And I want to get that point out there loud and clear with these 2 examples on AMRS and SXTC, why you cannot be overcommitted and be all in on that first pop. Hell, some people are probably all in right here on this wick right here. And they're probably shorting from 625, and this thing rips to 775. Right? I mean, let's be honest. A lot of people probably got stuck. Exactly. There's lots of ways. There's lots of ways to protect yourself. VWAP is one. You got lots of things. Okay? Lots of things. But overall, you guys got to understand pre-market highs, right? That's the first level. That's the first warning sign. So over pre-market highs, guess what? It's over a high of day, making new highs. While it's still below the prior day's highs and still technically has bag holders here, you gotta understand that you cannot be going all in right here because it can still bounce. So much room for it to bounce. It could even gone back all the way up to 8.47. If you're short from 625 full size or 650 all the way up to 850, you're torched. So just protect yourself, guys. Shorts, small size, according to what's left there in terms of the meat on the bones. That way, if you do get the move here, it's not a big deal. You still capture some of the move, but you don't overexpose yourself to that freakish, grind back move from hell. Okay? So let me know if you guys are on the same page on this scenario. Ugly, downtrending pre-market chart and how to respond to the situation, to the scenario. Would you say daily support and resistance is stronger than prior days? It depends. I would say prior days is stronger. And my rule of thumb is that most traders have very short-term memory and they only remember what recently happened on the stock. So the more recent the support and resistance, the more important it is. That's my opinion. People aren't going to remember what happened like a long time ago on this thing, but they're going to very much remember what happened yesterday, right? So people are lazy. Let's be honest. People are naturally lazy. And when people are lazy, they're going to want to only, take a couple steps back, not too many steps, and only see what happens in the short term. And not look down that rear, not look beyond the horizon, so to speak. People like to look at the short term stuff, right? Recent support and resistance. What happened yesterday? What happened the day before that? They're not going to remember what happened on SXTC like 5 months ago. Yeah, I would only go long if it breaks high of day. I would only go long if it breaks high of day. If it breaks high of day here, you got your classic every single short from here underwater, and it's going to be a clean long. So basically my play here would be shorting pop small size, only going short with any remote size at all if it hits 850, basically. Okay? Any more questions on ugly downtrending chart scenario? Okay, cool. Let's move on. Sideways neutral chart. We're going short at 850. No, I would short if it stalls out at 850. If it stalls out at 850 and rejects, it's a short. But if it goes over 850 and holds, it's a long. Yeah, exactly. It comes to be understanding what happens here. Because it might just end up being a double top, or it might end up being a breakout. I don't know that. I can't tell you. I don't got a crystal ball. You know, I can't tell you what's going to happen. All I could do is react to what happens once the stock shows its hand. That's it. Would I never go long on a rebound below pre-market highs? I do, but I go in smaller size just to account for the fact that, you know, it's below pre-market highs and it's not an A setup. But I will talk about a situation where it is an A setup. I think I have an example of that, so we'll talk about that. But in most cases, no, I don't recommend that, especially if you're new. The window to capture the profits on the long below pre-market highs is very slim, because you're swimming against the current again, right? You're swimming against the current. You want the path of least resistance, and if you're longing below pre-market highs, you're just fighting against too much. So if you don't know what you're doing, you're gonna get stuck. Yeah, I would short on pops below 850. And the keyword is pops. I don't want to short grinds. If it's just kind of just chugging along, I'm not doing that either. I want like panic, man. I want some like big time panic and then a slam back down. Okay, so let's move on to the next scenario. I don't want to drag this presentation on too long. So the third scenario is a sideways neutral chart. Okay, so this is the typical chart where you see, let's just say, let's say we have, like a stock just chopping around. Something like this, right? No clear direction, but you got defined support and resistance levels. What do you do? What do you do? Pretty simple. Let the stock show its hand before making a move. Let it turn into a long if it wants to turn into a long. Let it turn into a short if it wants to turn into a short. That's it. There's no chasing here. There's no gambling here. No slamming lows, chasing highs. Remember, guys, the name of the game is to buy low and what? Sell high. Buy low and sell high. It ain't buy high and hope to sell higher, guys. You know, it's buy low on the dip, confirmed breakout, and then sell high. It ain't buy high here when it's still 50-50 and hope to sell higher. And also at the same time, it ain't short low and hope to cover lower. Just keeping it simple, guys. You guys can kind of notice a trend here, guys. I'm very much about keeping it simple, because trading is already convoluted and confusing and complex as it is. It's complicated. Why make it more difficult than it already is? We can break down these scenarios into these basic situations and then determine what the proper reaction is to each one. Then we know exactly what to do. And that's all there really is to it. I have a checklist and I go down and I'm like, okay, we got an ugly downtrending chart. You know, short panic pops to resistance 1 with 1/4 size. Short panic pop to resistance 2 with another 1/4. If the panic pop is right to pre-market highs, then short a little bit more size. You know, I have a bunch of if-then statements. Again, guys, it's like a computer program. If, then, else. And that's all I'm doing. Okay, so let's look at some of these charts. Got MBOT on 114. That's 114.19. That's not 15. That's definitely a typo. 114.19. What did that look like? Okay. So this is actually the epic washout long play. So this is good. This is good. Let's see. Actually, no. Wrong day. We're gonna save that. We're gonna get to that. We're gonna get to that. Don't worry about it. All right. So this is MBOT on 114. It's a little bit of an uptrend, but it's not exactly like the obvious uptrend. But you can kind of see it's just kind of going flatlining right here. So what do you do at the open? VooView, I only use limit orders. I don't go market ever. Just putting it out there, guys. I don't use market orders. I know some people use them very well, but just had some bad experiences with market orders. Fat fingers, things of that nature. But again, MBOT, you got this little sideways here. What do? Right? You can see at the open, it actually rejects pre-market highs right here and starts looking like a short. But of course, when you got this sideways, you got to let the stock figure out what it wants to do, right? Reclaims pre-market highs. So guess what? We got our textbook flip bias short to long setup right there. So again, when you have this sideways pre-market action and you can't really tell what's going on, just let the stock figure out what it wants to do, guys. You know, you could scalp this short here, but you have to understand that because it's kind of in this indecisive mode right here. Even after the open right here, it's still indecisive. It's still technically holding this little sideways consolidation area. And once it finally breaks out of it, then it finally shows its hand. Now it's a long. Right? So you guys can see. Boom. So a lot of people here that were thinking, oh, it's a short. Well, they got torched right there. Not letting the stock decide what it wants to do. Right? Because right here, what's the stock doing? It's just chopping around. It's chopping around. Sideways chart. What's it going to do? You don't know. Let it figure out what it wants to do first, guys. And then just join the trend and just long dips against pre-market highs. Right there. You got a dip here against pre-market highs. Right? And then this high of day right here acts as support right there. Another dip opportunity. Rip higher. You see how easy things can get if you simplify and just let the stock do its thing and then join the right side of the trade. Don't guess. Don't gamble. Don't try to predict where the stock's going to go. Let's be honest, it's not a viable strategy. You're not going to be able to last in this game if you're going to insist on trying to take a guess at where it's going to go or taking a stab at where it's going to go. It's just not going to happen, guys. Let the stock figure out what it wants to do and then just join the trend. Staff on 122.19. Let's see what happened there. See here. There we go. You guys still hear me? We still good? Okay. Rick K, you might want to check your speakers or something. Okay, so staff. Let's look at staff. Again, the same thing. The indecisive pre-market chart, right? No clear direction. Where is it going to go? Where is it going to go? I don't know. I don't know where it's going to go. Let's say we don't have the benefit of knowing what happened. Where is it going to go? You guys tell me. Where is it going to go? I don't know where it's going to go. It can go higher. It can go lower. It can keep going sideways. It can dance around, do the tango, do the Macarena. I don't know. You tell me. I don't know. And it's not my job to guess where it's going to go. You know, I'm going to sit here and sit on my hands until it gives me a clear direction of what it wants to do. All right. While this thing is still bipolar, I'm not going to let it mess with me. So let's just see what happens. Again, pre-market highs, same rules apply. Pre-market highs, the first move is up. Pre-market high reject, turns into a short. Same thing. The first move, the stock shows its hand. It surges up. You got the chasers. You got the long chasers. You got the chat room guru alerts. And then you got the wick and then the slam back down. So it turns into a panic pop short. And a very nice one at that. I remember actually Maya nailed this one for a nice win. I actually missed this, but I remember Maya called this one in chat, nailed it for a nice little panic pop short. This is a very nice panic pop short. Okay, choppy pre-market chart, surges up, rejects pre-market highs, and then there you go. You got your panic pop short. So again, always let the stock decide what it wants to do, because you don't know if it's going to go up, right? Go up and then break out, right? But once this thing surged up and then slammed back down with that nasty wick, that was my short sign. That thing was probably not going to make it. So, again, guys, let the stock figure out what it wants to do and then react accordingly. And you get short subsequent pops too right here. Pre-market lows breached, stock continuing lower. So this is a nice example of a perfect panic pop short given the indecisive pre-market action. Let's talk about CLRO. Same thing. This one's choppy. This one's tricky. Let's talk about this one. CLRO, again, choppy, sideways pre-market chart. What's it going to do? What's it going to do? Choppy open. What's it going to do? Pre-market highs is right here. It's testing it right there. What's it going to do? Same thing, guys. Pre-market highs tested. Guess what? Fades off of pre-market highs, giving us a good short right there. More chop. At this point, I don't really even care what's going on. But you guys can see what's going on, right? You got the sideways pre-market chart. Let the stock figure out what it wants to do. You got a short opportunity here off of this wick. But you can see that's holding pre-market support right here. And again, this is where you can get yourself into trouble if you short this pop right here the second time around, right? This is the same situations as that downtrending chart, ugly downtrending chart earlier. If you short the first resistance, you're risking it going to the second one. So if you overcommit, granted, it's not that bad in this particular case, but if you overcommit right here, you're going to be stuck, bagging this position all the way up to pre-market highs. So that's why you cannot overcommit on this short. If you're shorting this pop, I would go in tiny size, because you're risking this thing going back to pre-market highs, obviously, and it can go even higher, and you could be absolutely destroyed. But you guys can see right here, sideways chart, fades at the open off of this resistance level right here. But then if you try to short this pop, you're running the risk of this pre-market highs getting tested, and you get taken out for a little bit of a ride right there. Pre-market highs gets rejected, stock starts fading and starts chopping around. Again, guys, let the stock figure out what it wants to do. It's so simple. It's so simple. Let the stock show its hand. And eventually, look what happens. Below pre-market highs still, it's still net short and ends up fading. So how do I approach CLRO? This stock was never a long. It was never over pre-market highs. It's basically a short on pops as long as it's below pre-market highs. But just because it's a short doesn't mean that you overcommit size right here, like I said. So you still got to manage the risk even though you know it's a short. But overall, this is a short for me all the way. Below pre-market highs. Ends up fading the rest of the day. Thanks a lot for showing up, Ma. I appreciate it, man. It will be posted after the conclusion of this webinar. We'll post it again on this website, and it'll also be posted on YouTube, but it'll be a private video. So no non-MadazMoney member will get to see it. It'll be a special video only for you guys. All right, so any questions on the sideways neutral chart? I think it's pretty simple, right? Let the stock pick a direction and then just join that direction. In addition to pre-market support, resistance, VWAP, do you use EMAs, SMAs, and what duration? I actually don't use them. I have a couple on my chart, but I don't actually look at them. They're just there for the sake of being there. Yeah, we will go over tape reading for sure. Tape reading will be something that will be of high interest to a lot of you guys, I'm sure, and I will definitely go over tape reading in a future webinar. And again, guys, this is going to be the first of many. There's going to be a lot of these. I think you guys will like it. A lot of good information. And again, I love the fact that we're going to record them and repost them, and that way you guys can review. So that way anytime you guys, want to catch up to speed, it'll be on demand. So, all right, let's go ahead and talk about some special scenarios. Multi-day runner. Multi-day runner. This is the awesome stuff. This is the textbook MadazMoney scenario, guys. This is if you guys have watched my videos, and I'm sure you guys have, and if you guys haven't, I don't know why you haven't. Please watch my videos. Help me with those 5 cents in Google AdSense revenue. It goes straight to the Big Mac fund. But if you guys haven't watched my videos, Elephant, RKDA, DCIX, and all those good stuff, washout longs, this is the ones where I make the 20 grand in like, 2 minutes or whatever, okay? The multi-day runner, epic washout long potential. If pre-market highs and prior day highs hold, that's the A+ setup. And unfortunately, the only example I can come up with recently is MBOT, because we unfortunately haven't had many of these. But, if you guys need to see them, just watch my videos and you get plenty of examples of those. So you're willing to short the pop, Miko asking, so you're willing to short the pop on the opening candle with the stop above pre-market highs, correct? AVCO on 130. Let's look at what happened there real quick. $130. There's like no volume here, man. We looking at the right day? Okay, 128. Yeah, okay. I was like, man, there's no volume, man. Okay. Yes, so I would short any pop below pre-market highs, but just sizing appropriately. With the stop at pre-market highs, correct? And again, when it comes to stopping out, you don't stop out right away right when it hits it. At least I don't. Sometimes it just goes over by a couple cents and then just stop hunts everyone. And then it just falls back down. I wait to see if it actually holds, and then, then I get out. But that's just me. You to each his own. Some people use hard stops, I use mental stops. And if you're a newer trader, you know, if you don't trust yourself enough to respect mental stops, you might want to start off with hard stops. It's a lot more easier, and it's a better fail-safe to protect yourself. Yeah, so size less the further it is from pre-market highs, correct. Because you just don't have enough risk-reward. Because the stock eventually is going to bottom out. You know, unless it's like one of those infinite dilution type stocks that just dumps forever, infinite dump. Right, it's rare though. You know, the stock eventually, no matter how bad it goes down, it eventually just bottoms out and starts grinding back. Right, that's why you get the grind back lull. Right, the shorts that overstay their welcome, they get the grind back and they get stopped out. Right, so you got to protect yourself in that situation. Somebody's got to cover eventually. Exactly, it's both sides of the trade. You know, the same thing with the stock going up; it has to go back down at some point. It's got to dip at some point. It's not going to go up forever. Same thing with the shorts. It's gonna bounce eventually. The only way it's gonna go down forever is if there's so much dilution that every single cover is getting sold into. That's the only way. And that's a rare scenario, guys. Usually, even if there is dilution, they stop diluting at some point. The dilution guy's gotta go on his coffee break. He's gonna stop hitting the dilution button, and once that happens, you know, you get the grind back, right? In this particular case, AVC or the grind back was pretty brutal because it resulted in this squeeze. And you can see pre-market highs coming into play right here, actually. Right, it rejected one last time, but it held up and then it ripped. So you always got to respect pre-market highs, even at like 1:30 in the afternoon. Kind of interesting and funny how it works out that way. But okay, let's not digress too much. Let's talk about MBOT. 114 to 115. This is the epic day here. Textbook washout long setup. We got the prior day's highs right here. After hours highs here. Kind of more or less coinciding with pre-market highs, which is pretty nice. Got some support here and support there, right? That's when the halt guy comes in. Oh, our good old buddy, the halt guy. Man, he has a pretty awesome life, man. He gets paid to not do his job. Essentially. Halt guy. We should all pay him a visit one of these days. Take a trip to New York and pay him a visit. He's probably just sleeping at his desk. Alright. Let's talk about MBOT here. So we got obviously the nice day one runner. It survived in the day two. You got the nice pre-market chart here. We're looking ugly, getting shorts to think that it's going to go down. And guess what? Stock not only rips back up, but you actually can see that it's actually holding pre-market highs and going higher. So this is where you get the epic washout long opportunity. It actually went long, I believe, right here on this candle. Let me see. Yeah, I went long right here. This wick right there. Right there. Perfect. Perfect right there. I don't know if you guys can see that, but right there. That was the epic washout long opportunity. And that's the golden setup right there. I noticed you guys nailed a lot of this in chat. So pretty awesome. I think we're all on the same page and understand the logic behind this trade. So I'm not going to go in too much on it. Just watch my videos, guys, and you guys will catch up to speed very easily about the concept behind this video. But basically, it's just shorts getting caught from the day one and from the pre-market the same day as well. Textbook Madaz action right here. But I saw a lot of you guys nail it in chat, so I think we are all on the same page on this one. And if you're not, again, just watch my videos. Catch up to speed. Miko saying, I noticed a very interesting thing this week about the halt guy. Not sure it's all on level 2s, but there's an LULD price that pops up on non-DAS. Not sure what you mean by that. What do you mean LULD price that pops up? Yeah, because if you long here, it's still below pre-market highs, and theoretically, it could still dump. So that's why I went long here. You can kind of long here, but it's still below pre-market highs. It can still dump. The best long was right here. Over high of day, over pre-market highs, and over prior day's highs. Is that real tick? Or light speed? Light speed. I think that's light. Yeah, light speed. Okay, light speed. Yeah, no. Light speed has that feature built in. That's actually a feature that's part of light speed. The Hulk guy doesn't have enough work ethic to do that, guys. Don't worry about it. He's too lazy. He's still sleeping. That's Lightspeed's platform. They have that feature. Alright, so we're going to go ahead and move on to the last special scenario, which is a weak day 2 or a repumped ticker. So this is a situation where we have like a stock that, survives in a day 2, but it kind of gaps down, or it's an ugly, chart on a day 2. It's not the typical washout long setup with the MBOT that we just saw. Or this is a situation where a stock was in play and maybe like a couple days later or a couple weeks later it gets, repumped on a pump PR or something like that, or a chat room decides to alert it or something like that. And then you have existing bag holders from higher prices. So that's a repump ticker. So they're kind of similar. And I think you guys know exactly what I'm talking about. We've had several of these lately. A lot of stocks that run on day 1 and then day 2 it gets like an offering or it gaps down or something like that. We've seen this. This is actually the most common scenario recently, unfortunately. And I really don't like this scenario because what happens is it gets a lot of people to think that, there's a lot of bag holders. And this is the bag holder short, the term that I would use. Some people call it low-hanging fruit. But the problem here is if you got a stock that runs on day 1 and then on day 2 you get the gap down, right? Same concept applies to what happens when you have a downtrending, ugly downtrending chart. What happens is people think that there's bag holders from day 1 and they short that first pop and then get taken for the ride, right? So usually a stock that's failed to continue, it's a great short setup most of the time. Most of the time, okay? Because when it's not, well, our good friend Elmo is going to pay us a visit from the depths of hell. The squeeze from hell, guys. We know that we've seen it happen. We've seen it happen. And I got some examples to show you guys what happens if you start FOMOing these gap downs and you start shorting here at these levels and you get ripped, absolutely destroyed. So let's talk about it. So we're going to talk about some scenarios where it works and some scenarios where it doesn't work. MBOT on 117, which is I think a couple days after the play. There we go, 117. Actually, we're going to need the big picture to see. There we go. So this is 117. So obviously we have some bag holders. We got some bag holders, right? You got pre-market highs, same thing, and it rejects. Pretty simple, right? Bag holders is a pretty simple bag holder, low-hanging fruit short that's behaving the way it should. So this is kind of obvious. Not really much needed in terms of explanation. It's just a lot of bag holders and it's just dumping. TBLT on 2.8. What happened there? So 2.8 is this day. I believe that's the wrong day. I believe it should be February 1st. I apologize. February 1st. February the 1st. right? You got bag holders. This is a repump ticker. No volume these days. Repump, pre-market high, reject, and a fade. Okay, so this is another example where it works. It's not exactly a day 2, but this is an example of a repump ticker. Lots of bag holders. You know, probably a bunch of swing shorts getting bum rushed out at the open, and then they get slammed back down. Now let's get into some squeeze from hell kind of scenario. This is the good stuff. This is where shorting low-hanging fruit stocks go wrong. Let's talk about it. PXS. This is from a couple years ago, but I remember fresh in my mind because I got destroyed on this one. Let's talk about it. December 4th, 2017, PXS. Oh boy, look at that one. This is a Widowmaker, guys. Widowmaker right here. Runs up. Infinite dilution dump style here. Dead, no bounce. This thing's dead, right? It's dead. No bounce. Pre-market highs here. You got the weak pre-market week open, no volume. Let's short here. Oh, let's add here. Let's add one more time at pre-market highs. Boom! Look at that. 6 to 12. 6 to 12. Even over prior day's highs too for good measure. And I remember today. I remember this actual day where I actually shorted here, pre-market highs, and also at prior day's highs as well. And this thing just, look at this thing. This is the squeeze from hell, guys. This is the squeeze from hell. So you guys can see what exactly can go wrong if you're just treating every single bag holder stock as a low-hanging fruit short and add and not stopping out, right? You guys can see that. Let me know if you guys are confused what I'm talking about when it comes to shorting low-hanging fruit day 2 type stocks and potentially getting absolutely destroyed if you're just assuming they're all going to be shorts that fade. And again, it goes back to risk reward, right? If the stock has so much room to bounce, you cannot overcommit size. That's it. It's the same theme over and over again. The stock can theoretically go all the way back up to the prior day's highs, and if it's hanging around here, you can't be committing size at these levels. That's all it really is. Even if you're short and you're caught on the wrong side of the trade, if you're in with the appropriate size, the proper risk management, you're not going to get destroyed. That's all it really is to it. So what do you generally use for your stop level on that play? Prior day's highs? Most likely, or pre-market highs as well, or high of day. But as you can see, the gap between pre-market highs and prior day's highs is pretty big right here, right? It's $3. That's 50% from this $6 level. That's a lot to risk, right? If you're short here and you're risking all the way up to here, that's a little bit too much. So sometimes you gotta understand where you are on the chart. You know, you got this much gap, you might as well not want to do it. Yeah, exactly. So you gotta understand what the chart looks like, what kind of chart you're dealing with, and respect the chart accordingly. So, you know, you gotta understand, you know, there's that much gap, maybe you're just better off not doing it. It's all about risk reward again, right? You're short here, but you're risking a $3 rip. Probably not worth it. So yeah, just good example here. What can happen when you decide to, you know, short these low-hanging fruits stocks with too much size? Again, same thing. Risk management, understanding that there's always that potential for that stock to do something stupid, And again, I know a lot of people will throw that black swan term out there, but all it takes is just one black swan and you're done. And here at MadazMoney, we're trying to protect you guys from these situations. And we're trying to protect you guys from getting stuck in said black swan and ruining yourselves by taking all these preventive measures and understanding every single possible scenario, so that way you don't make the wrong decision when the push comes to the shove. So let's go ahead and talk about our last example. This is going to be our last example of this webinar. Kind of running long here. I don't want to keep you guys. On ABIL, on August the 8th, 2018. Okay, so this is a stock. This is a repumped stock. If you guys look at the daily chart right here, you can see that it was a repump. It was first pumped in June, right? June. And then there was nothing for a while, and it was repumped again in August, right? So what happens here? Let's focus on just the daily chart right here and see what's going on. So it looks like shorts probably had no reason to cover, right? Stock's going down, whatever. So you got a bunch of swing shorts in this on all these pops, I'm assuming, right? You better believe that after this dump, shorts are probably just piling in, and they got their move. Right? Until the day we get the repump, 20 million shares traded, right? And then you get the rip. It's bound to happen. Stock's going to rip at some point. So what do you do in this situation? And looking at just the daily chart, you might be tempted to short here, especially these shorts that have gone to the habit of just shorting every single pop. They're going to probably short, right here, right, with this resistance level. They're probably going to try to short there. There. I mean, you can see how this develops bad habits. If you're just shorting every single pop and getting used to it, working out for you every single time, and you get something like this, you're going to be in that add mindset. And you can see how it can mess you up, right? So let's look at this now from an intraday perspective and see how it played out. Again, remember these levels. You got the resistance here at $6, and you got some resistance here around $7, $8, close to $8. Let's see how this comes into play here. And this is a repumped squeeze from hell kind of setup. So the PXS example I just gave you guys was a day 2 squeeze from hell example. This is a repumped ticker squeeze from hell setup. Okay. So remember that $6 level. Remember how critical it is. It's coming into play right here. You can see it. Right? $6. And remember all the shorts that are so used to shorting. They probably shorted there. They probably added. And then they kind of noticed this $6 level. It's holding. Uh-oh. And then it rips higher and it hits $8.50. So you guys can see what can happen. If you're so used to shorting, this is what can happen to you. Right? Shorting at $6, ending up getting ripped to $8.50. A lot of volume too. A lot of room to go in, a lot of size. Somebody could easily be short like 20, 30,000 shares into this and get destroyed. You got the uptrending pre-market chart, right? Holding pre-market highs. So technically from an intraday standpoint, it is a long. You just got to respect the fact that there's bag holders. So if you're going to long this, long with caution, because there could be bag holders that could dump into it, theoretically speaking. But still at the same time, there's no reason to short this thing because you can see that there's still an uptrend. Okay, so the stock's continuously making more and more highs like this. It's over pre-market highs. You got to understand that sometimes maybe it's just better off not shorting it. Especially if you look at the Able daily chart again, there's just way too much room on the daily chart for this thing to run. Right? It can go all the way up to $14. That's just too much. Too much risk. So you can't use that same concept of, oh, let's use prior day's highs or the prior moves highs or whatever as resistance, because you got just too much room. The thing opened at like $5. You cannot keep adding all the way up to $14. You just can't do that. Okay, so just to illustrate the point, guys, sometimes it's just better off not shorting these bag holder stocks, especially if you look at it from an intraday standpoint, and that's just uptrending, and it has every single other signs of being a good long aside from the fact that it's a bag holder stock. Then maybe you're just better off just maybe going long small or just shorting small and taking your stops if needed. Okay? Yeah, that was a brutal fake out. But you guys can see, again, this thing has all the signs of being a long from an intraday standpoint. It's just the fact that it was a bag holder short that probably got people to think that it was a short on every single pop, and they got ripped from basically $3 almost. Right, this thing was $3 pre-market, 3 to 8. Yeah, shorts thought it was toast. Held VWAP, continued higher. Again, $6 from the daily resistance coming into play there. You guys kind of slowly seeing things adding up, right? Daily resistance, daily support, pre-market resistance. These things are starting to come in together, I hope. Right? You can put all of these pieces of the puzzle together, get the picture. Daily support and resistance, pre-market support and resistance, how to react in each scenario, how to know how to size appropriately so that way you're not stuck in this kind of situation even though this thing has bag holders. So this is the last example, guys. Let me know if you guys have any other questions. Presentation is officially over, so let's take some questions here, and we could be on our way and be like this guy here and making it rain come Monday morning because we know exactly what we need to be doing. When do you go long below pre-market highs? I would go long below pre-market highs if it's a day 2 multi-day runner. If say the pre-market highs is higher than the prior day's highs. So let's just draw this real quick. I can draw this real quick. So let's just say you have let's just say this is the move on day 1, right? And then the day 2, this is the pre-market highs is here. This is the prior day's highs. And you get like a washout right to here, I would still probably try to take a long here. But respecting pre-market highs, of course. Does that make sense? Let me know. Let me know if that makes sense, Green Lizard. Yeah, you still gotta respect pre-market highs though. If it stuffs pre-market highs and goes back down, you still gotta respect that. But in this situation, you get the nice downtrending pre-market chart. Shorts probably think it's toast here. If they get stuck here, it's gonna rip. Yeah, I would buy prior day's highs in that case. But I still would have to respect pre-market highs. Can you explain the difference between what a bag holder stock a little more in detail and what to expect from them versus a non-bag holder stock? So a bag holder stock is basically a stock that has overhead resistance, right? So again, ABIL is a bag holder stock because it was a stock that was pumped previously prior to this move. So basically every single person that bought up here, they're down on the trade. So that means that basically every single time the stock tries to pop, you're going to have a bunch of people up here selling into it. That's basically what a bag holder stock is. A non-bag holder stock is what I call a fresh ticker. It has no recent bag holders, so therefore there's less likely to have people selling into the move. So basically there's just less forces going against the stock going up. That's the difference. Do I buy the old pre-market highs or the breakout here? I would just buy the prior day's highs in that situation. I'm not sure which chart you're referring to or which scenario you're referring to, though. Oh yeah, in that situation, you could long the pre-market high breakout, treat it as a regular intraday pre-market high breakout, but understanding there's bag holders, so you just size appropriately. Right? But I wouldn't go in major size or anything because those sellers from $14 can dump on you at any time. So you gotta understand that. Just gotta understand the factors at play, guys. Just understand who's in the stock. On ABIL, yes, this stock was a nice long setup from an intraday perspective. Right? But there's bag holders from, $14 and below dumping into this move. That's why it's kind of grindish and not like parabolic, And another thing to note is that if you look at the daily chart on ABIL, you look at the daily chart right here, you see how on this, when it was a fresh ticker, it only required 10 million shares for it to run from basically 2 to 14, right? 10 million share days, right? You see that? On this particular day, the biggest move, it went from 8 to 14, right? 8 to 14 on this candle. It only required, less than 10 million shares to do it. 7.5 million shares. But look at this day. 20 million shares. Right? But the stock couldn't go anywhere near these levels. So just interesting to note that. Just goes to show you that in this particular case, there's some people that probably sold into this move that damped it and prevented it from going higher. And there was probably some dilution too, I would imagine. So just always note that the volume is always important. If you get 20 million shares, it should have gone higher. It didn't. So just goes to show you there were some sellers into that move for sure. Do you have a time limit between a bag holder run versus a fresh new move, a couple months, year? That's actually very interesting. Very good question. To be honest, I really don't really have a pinpointed answer for that. I would probably say within a couple months. If I were to guess how it usually plays out, a couple months is pretty good. Like, for example, ABIL, that's a good example of a repump ticker. You guys were around for dries. That kept showing up every so often. Usually like 3 months is probably the time frame for that. Like ABIL here was June and August, so about 1.5 months. I remember some of the blockchain tickers showed up again, like maybe a couple months later. But yeah, usually it's about 2 to 3 months. But I think if it shows up after like 6 months or a year, it basically becomes like a fresh ticker again. I guess that's enough time for everyone to get out, or all the shorts to get out or something, or all the longs that were bag holding, they finally get out at that point. But that's a very good question. Very good question. Very tough to give an answer to a T on that one, but I would probably say like 3 months. 2 to 3 months. Okay, guys, any final questions? We're going to wrap things up here. I don't want to drag this on too long. I feel like this is a very information-packed webinar, very educational. Very happy with the way it went. Love these examples. Hopefully you guys got the value you got out of it, out of giving up your Sunday and hanging out with your old boy Madaz here. Again, this is going to be recorded. You guys can watch it at any time. Awesome, guys. So thanks a lot for all you guys that showed up. You guys are total troopers. Love all you guys. We'll see you guys Monday morning. And hopefully we'll be making it rain like this little fella right here, because we know exactly what to do, right? Awesome. J-Spec, I'm at Newport Beach right now. I'm in California, but in a different part of town. Thanks a lot, guys. Have a wonderful rest of the weekend. See you guys tomorrow.